Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Wednesday. All right, so we're going to take a look at the economic calendar because one of the things that we do have to keep in mind for today is, I'm going to get my drawing tools here. We have the FOMC meeting minutes. So you'll take a look here on Wednesday, kind of smack dab in the middle of this screen. You will see, here it is. Boom, FOMC meeting minutes. This is a red hot zone. What is a hot zone? For those of you not familiar with the term, well, the color gives it away. What is a high impact? So that's the first thing, scheduled and preferably macroeconomic event that could change the way the equity markets, the treasury markets, the currency markets tend to move. FOMC meeting minutes will land mostly in that macroeconomic bucket, where if there is any aha moments to be taken from the very well coiffed statement that, the notes are not, once upon a time, the notes kind of showed some of the disagreements and the rationale behind those disagreements. Modern day FOMC meeting minutes are very well curated to sort of show a consensus, and they're not the raw, so-and-so dissented because of this. It's not quite that anymore. So just presume it's going to back up a lot of what was said at the press conference from the last meeting, which is what this is from. But nonetheless, if there are any aha moments, they'll play out here in the target rate probabilities. They'll play out in what our expectations are for rate cuts going into the remainder of this year. And by the way, speaking of the remainder of this year, why am I still so bullish? The main reason I am still so bullish is because there is a very high probability, actually it's baked in, discounted, expected, that we're going to get 1/4 point cut, possibly 2. I fast forwarded out to December. Yes, we can time travel. Expectations are for 1, if not 2 rate cuts. 3 is very improbable. Holding for the rest of the year is highly improbable. But again, it's possible, but not probable. So you work on what's most probable. That's 1, if not 2 more rate cuts. And of course, every little bit of data that we get in terms of inflation, CPI, PCE, in terms of jobs, think primarily non-farm payroll, but I would look secondarily at the jolts. And then if we look at what low rates should be helping, it should be helping the consumer buy stuff, retail sales, new home sales, existing home sales, consumer confidence. These end up being very important hot zones as we go forward. So if you haven't thought about how the economic calendar event affects that longer term macro expectation, a longer term trend, please check out just a handful of these economic events. And hot zones, the key to a hot zone is that it's scheduled. When we don't know it's coming, when there's no kind of warning, like for example, geopolitical strife, nobody knows it's coming. Sudden sound bites from OPEC or whatever is frankly even happening with the tariffs. These are not hot zones because there's no way for the equity markets to prepare. There's no discounting, right? So that's kind of where we're at right now. All right, let's go ahead and take a look at what's going on with the charts. So let's jump on over to, there we go. All right, so we're going to take a look at the S&P, Nasdaq, and Dow. All right, so here we go. Start off with the S&P here. All right, where are we right now? This is a choppy environment, right? The bulk of the rate cuts have already been done. And ultimately, when I'm looking at the bulk of the rate cuts, all of us are looking at the bulk of the rate cuts already been done, 1, maybe 2 left. And that means that the pause is the next thing on everyone's mind. As soon as Jerome Powell, basically, this is really what this was. This December 18 candle was pause day, right? It was pause day. And what that told us is, okay, Federal Reserve's just about done. If we were expecting a lot more rate cuts in the future, if we were confident about 2, 3, 4 more rate cuts, now we're basically confident of one based on the data. We always go by the data, gang, right? So that's where this all changed. And lo and behold, now we're in this range. Isn't that interesting? So pause day, that was the day that everything changed and we went into a non-trending environment. Even amidst this non-trending environment, again, it was just a bad idea. And by the way, when this happened, what do we hear? Price action will typically determine the headlines. Price action is going to be bearish day, bearish headlines, right? Bullish day, bullish headlines. If you're watching television, heaven forbid, and listening to whatever's on financial television, bullish day, bullish guests. Unless they need to rattle things up again, because look, a perma bear always makes for great television, right? As I like to say, if you want to make money in the markets, be a bull. If you want to be on TV, be a bear. Now, if we're looking at where we are right now, it shouldn't surprise any of us. Take a peek. Resistance, right? More resistance here. These are automatically drawn levels. So this is all resistance. And look at where we keep topping out at. So yeah, we're right back to a ceiling. We're right back to a level that price action could have a challenge moving higher through. Now, if it does on the other side of this level, I would look for some buy stops and a little bit of bullish momentum, because we would escape the range, if you will. It always reminds me of one time my dog burrowed under the fence. And up until then, she stayed in the yard, burrowed under the fence, or it might have been a gate in our yard, and she was gone. She was off. She came back, right? We went and got her. But when she got out of that fence, when she got out of that range, she was gone. And that's a lot of times what price action can do. So yeah, I kind of imagine this price action like my dog burrowing under the gate to find freedom. Anyway, until that happens, it's fenced in, right? Until that happens, it's fenced in. So we know where the resistance is. It's the same place it's been, frankly, since the middle of December. In fact, it's the resistance level that preceded the Jerome Powell triggered sell-off. That's where we are right now on the S&P. I would be extremely cautious being bullish right now around 6150 on the S&P futures. Now you can shorten the time frame and do lots of things, but I'm not going to presume a breakout. I'm going to presume resistance holds until it doesn't. All right, that's what I'm going to presume. And in a choppy environment, this would be considered overbought. But just because the S&P is stuck in a range, this is something we've been doing in the Sector Secrets Mastery. There is an uptrend in financials. There is a likelihood of higher highs happening in the XLF. This is why we're in the XLF in the Sector Secrets Mastery. So while most traders are thinking about what is the Mag 7 doing next, what's the Awesome 8 doing next, those kinds of things, we're focusing on trends. And that's what you'll see we do, we focus on trends. And that's really where we continue to be bullish in XLF. It's not setting the world on fire or anything, but it's a nice trade. It's yielded a first target, and now we're looking for a second or third target. In a situation like this, I'm going to be patient, and my next target will be as we break to a new high, far more probable to break the range when the overall trend is structured bullishly. And this is in direct contrast to what we see in the S&P. All right, what about the Nasdaq? Let's jump on over there. Is the Nasdaq doing something similar? All right, so there we go. Choppy market. Are we at the same kind of resistance level in the NAS? No, we could probably say the NAS has got resistance in this area and then resistance in this area. And we're kind of on a slippery slope here. The NAS is in a better spot to at least climb a little bit higher and maybe take on 22,350. Now I'm looking at the NASDAQ futures, okay? So this is the NQ that we're looking at. Probably has a little bit more upside, trying to form an uptrend. Okay, well, what's strong within the NASDAQ? Well, this is what we're going to do. We're going to open up our multi-structure, and I'm going to take a look at the stocks within the NAS. Here we go. And I just crack open and look at the stocks weighted within the NASDAQ in the order of their weighting, and look at which of these stocks is carrying the NASDAQ higher. And sure, Apple and Nvidia have had a nice couple of days, but that's not the workhorse here. Obviously Microsoft is doing little to nothing to help. Amazon also little to nothing to help. AVGO doing little to nothing to help. Gosh, Tesla's actually doing the opposite of helping. Same thing with Google. Right? What are the motors that are pushing this index higher? Costco, Netflix, T-Mobile, Cisco, right? There are names, Meta for sure. How could I forget that one? So that's where I'm going to focus on. What's already in motion tends to stay in motion. Newton was a heck of a trader, and what's moving sideways tends to stay sideways until there's an external catalyst. Could that catalyst be FOMC meeting minutes, right? So we're always looking at, is there an event, a hot zone, that's going to disrupt the current trend? Make it pull back, make it accelerate. Is there a hot zone that could take a sideways market and have it break out or break down? So that's where it's always a meeting of structure and some sort of catalyst. And that's constantly what's colliding in the market, either things we expect coming or things we don't expect coming. The strongest trade we've been doing this since the end of January, and that's continuing to be bullish in gold. And I have GLD. We have two trades in GLD. One is the GLD calls that expire this Friday, and the other are GLD calls that are going to expire out in March. So either way, we've got these GLD calls that we're taking advantage of, and as they say, buy the dip, right? And that's exactly what we're doing. In this case, the dip is defined by the support of this gray area. This is an unfair advantage. If I wanted to rename this tool, I'd call it the unfair advantage, because what it does is it sees things that most traders won't see. And what most traders don't see is the historical volatility implications of what could a contract like GC move day after day. And then let's put some support and resistance zones around that high probability, 68% probability of movement. It requires a lot of number crunching. It's really an algo. And I don't say that to be fancy. It's an algorithm. It's an algorithm, it's math, right? It crunches a lot of data, and then it curates it and then simplifies it by automating it on the screen. And I trust that a lot. And I've been trusting it a lot more, even more so than mean reversions. Not that I don't love a mean reversion, but the probability of mean reversions in modern markets, especially in an accelerated trend, it has been far lower. It's been far lower a probability of an uptrend like gold coming back down to a mean reversion like this. And, look, don't take my word for it. Take a look at this chart. Every one of these zones is pre-plotted at the beginning of the day. So I see all the support levels, right? I can see all the resistance levels, right? These are pre-plotted at the beginning of the day. You can see where it is right now. Here's my resistance level up in here, right? Here is my support level down in here. And I just trust these, and I use this unfair advantage to see where most likely, based on historical volatility, gold is likely to go. And when it gets down to that support level, that's where we've been buying those GLD calls. Along with GLD, we've been buying GDX. And I share my book with you all in these Charts and Coffee sessions, because that's all that matters, right? My analyzing things that I have little to no intention of getting into doesn't help anybody. This is what we're doing, right? And a lot of these positions are fairly unique to what we're doing in the room, because frankly, most traders are looking at their favorite stock. Most traders are looking at whatever's being talked about on the news. They're talking about the Mag 7 in an endlessly nauseating way. That's not where the structure and the follow through are at. In fact, yesterday's video at the Simpler Trading website, if you go to the Simpler Trading website, here we go, YouTube channel, I should say, was right here. Focus on follow through. Where do you think, us and a few hundred of us, where do you think follow through happens? In trends. And I walk through a lot of the basics of, if you're struggling to grow an account right now, what are the things that I do in the mastery? What are the things that I teach? What are the things that we live in the mastery? Cash account, a focus on risk first. In fact, I don't know who left the comment, but I really appreciate it. Jeff said, very thorough analysis with an emphasis on risk management. I love that comment because that's exactly what we're doing. And focusing on uptrends, focusing on long calls, focusing on avoiding pattern day trading issues by trading in a cash account. I don't need to put on spreads. You don't need to put on spreads. You don't need to sell premium. You really don't. It's all really a directional play. So realize if you sell a put, it's really directionally the same thing as buying a call. Yes, one's a credit, one's a debit, but both positions directionally need the market ideally to either stay flat or advance higher, right? Now, yes, there's nuances to both. There's nuances to both. However, both positions need that. So this idea that there's this neutral trading, it doesn't really exist. Be careful. Almost everything about trading is some sort of directional bias, even if that bias is we're going to stay in a range, right? But when we grow our accounts, the best way to do it, and we know this, right, is find those uptrends. And that's everything that I calibrate to. So check out that video from yesterday. And you'll see a lot of the guidelines that we practice in the mastery. And they're unique guidelines. You're not going to usually talk to a 35-year experienced trader who's going to say, I trade in a cash account. Pretty unique. You're not going to find a trader saying, I'm buying the dip. Usually most traders with some years behind them are going to do usually a lot more advanced things. And I tried those things. They didn't work. They didn't work as well. They took a lot of time. They were very complicated. So I just realized, Rob, just lean into what you do best. You like to follow trends. You like a simple approach. And that's what we do day in and day out, right? So that's why I talked to you all about the positions that we've got here in the room. All right. And by the way, as you're taking a look at things like gold and GDX, these are, again, things that I teach. And here we go. What are the stocks that are moving higher within GDX? What are the names that you could take advantage of because this ETF is moving higher? This is the sector secret, gang, right? So if you're looking at, it's really easy to see. It's really interesting when I look at the way in which, people build watch lists. A lot of times they'll trade their favorite name as opposed to a relative outperforming name with high weighting, right? And you can see here, whether that be NEM, AEM, or gold, that's where we would focus on follow through. And this is going to be tethered to that gold futures or gold commodity trade. So again, things to keep an eye on. All right. I'm just about out of time here. So by the way, I just want to remind everybody also, day one of the workshop starts today at noon. It's not too late to join us if you want to check out what we're doing in the Sector Secrets Mastery, as well as pick up my top tier tools and my unfair advantage here in the daily and the hourly price movement ranges. You can do so. Check out Simpler Trading /immersion right here. And that starts today. The first workshop is today at noon. All right, gang, have a good one. I'll see you tomorrow, same time, same station. Be good to each other.